Aloha everyone. Just really quick, the overall market continued with its sell-off today. It wasn't too bad, but you can see we closed near the lows. And even though the NASDAQ wasn't down 0.20% and volume was lower than the session before, which for some odd reason the volume bar isn't right here on Telechart, it was still above average. So that's not good. And with the recent action the past week, the pressure is still on the downside. But intermediate term, still above the 50 and 200-day moving average. So my models still are not even under neutral yet on this one. Excuse me, somebody just came in the chat there. And as you can see on the NASDAQ 100, volume also was above average with that shooting star pattern. So once again, not the best looking setup overall. The Russell 2000, Dow Jones Industrial Average, and S&P 500 also closed near their lows. Once again, volume lower than the day before, avoiding a distribution day, but volume is still above average across the board. So we're definitely not out of the woods yet. But like I said, still above the 50, still above the 200. And as long as that's the case and new long signals show up, I'm going to take them. Now this evening, there's only 3 new long signals of quote higher quality stocks, 1 add signal. But the thing is that they're all lower price thin stocks. These could have easily been thrown under the speculative position section. But I want to just explain why I am going to go long them since they are of a little bit higher quality. The first one I'll go over is TAIT. I flagged this one initially in my Max Green Bot for the past 5 days scan. However, after doing a further review about its financials, it's a lower price, some quality stock. It's just super thin, but you can see the previous uptrend. Pretty solid off those early 2017 lows, and it's been holding up very well while the market's gotten a little crazy here. So pretty clear cut. Want to get long TAIT, limit order 172. The first cut loss on this one, right here, right below here, 164. The final cut loss, you can make do with a move below 157 back here where the last pocket pivot point signal is at 156, or you could go even deeper, which I really don't recommend in this tape, and I don't recommend new traders take these trades at all. This is really for experienced traders that just kind of want to see if they can hit a home run or two. Obviously, my first target goal with TAIT would be 213. So looking at least for a large move, but obviously I want this thing to go to new highs. So 172 limit order, 164 first stop, 156 final stop, or 152 if you do decide to take it. I just don't recommend it. Speculative name. If you're a new trader, go for the safer, higher quality setups. This one is a higher quality setup because of the way that it's acted since October, but it's just too thin to consider it at all a higher quality setup overall. And it's lower price stock, only $1.72. You get what you pay for. Sometimes they misprice stocks, and it looks like this might be the case, but normally you get what you pay for. DZSI was in my low price perfect speculator scan and green bot for the past 20-day scan. Whenever the market is weak, I look for any stock up or down on the day in these perfect speculator and Bob scans to see if anything shows up with a similar price bar like this. You have DZSI confirming the recent support, and you have it closing near the high of the day with an open lower than where the high of the day is, printing a bullish hammer candle pattern at that first support level. So pretty clear cut. I want to get long at 820. First cut loss 790, move below 795. Then the final cut loss right here, move below 755 at 750. Now this stock is extremely thin, so you may or may not get filled. And once again, with a stock this thin, I really don't recommend anyone trading it. But you can see its move off those February lows right here to where it went now. It's already had a nearly 100% move off those lows. So it actually has had a 100% exactly move off those lows. So this is definitely a stock that can move when it decides to move. And with this low inherent risk right here, using that first stop level, especially if you do decide to take it, I recommend maybe just using it. The risk reward situation is well in my favor and worth it with the markets overall still being an uptrend. The final new long position, CTSO. This one is slightly extended from its 20-day moving average, as you can see, but the 10-day moving average is within the real body of the candle bar, and the 5-day moving average is above. But once again, I go through these scans looking for any up or down stock. CTSO was flat on the day in my perfect speculator low price stock scan, as you can see from the June lows. from here to the highs. It's had that 100% previous run, so this stock can move when it moves. Want to get long CTSO, 695, first cut loss, and probably the only cut loss anyone should use if you take it right here, 665 and move below 670. Final cut loss and move below these lows, 620, so 615. I'll be all out of CTSO. But like with all of these long signals, what I didn't put up, if TAIT fails at first stop level before hitting the second one and loses, let's say it's max green bop or does it on heavier volume, I'm raising up all or half of my stop. Same with DZSI. If it fails this level before hitting this one, same situation, raising all or half of the stops. And with CTSO, especially with it already being extended from the 20-day moving average, same thing is definitely in effect. It moves below this low right here, I'll be moving all or half up. And the highest quality of all the signals is the add signal in HLG. HLG bouncing right off its 20-day moving average, got that nice bullish candle price bar. It's not closing higher than where it opened, but you can see with the bullish tail here and with the price bar near the highs here on this chart that it did more work in the upper end of its price range. HLG is canceling quality, perfect speculator quality in my scan looking at for stocks with green bop for the past 20 days, and in my scan looking for stocks with max green bop for the past 5 days. So it was in 4 scans. Once again, if it had high, and it was also in my tertiary scan, if it would have had higher volume, it would have been in my price volume bop surge scan. So it's an across the board signal in this one. The problem is HLG is very extended from its 50-day moving average and extremely extended from its 200-day moving average. And even though the last time it had a base here, it exploded higher, you can see as it consolidated here, it moved higher but had to back and fill and create a longer basing consolidation before rocketing higher. You can see here the current base that we're having is much, not only is it shallow, but time-wise, it hasn't even been really a full month yet. So to get that 250-day moving average closer, the longer we go sideways, the better the launching pad is for a huge move higher. But this stock is so strong, it could easily just keep moving higher. Next thing you know, we're at 100 with it, especially with all the accumulation it's under lately and with the tight price action while the market does have its little pullback. But want to get long, 42.04. First cut loss level, just like before, 39.55. Right here, 35.09. And if you're really frisky, you could have a third stop here at 31.09. I'm willing to give this stock some room, so I just want to let you know what I'm doing. But on all of these stocks, if you decide to take it, obey that first stop level. Keep that risk in line with the current market. The market doesn't favor the bulls short term, favors the bears, but intermediate and longer term, everything still looks fine. So until we turn lower, I'm going to continue doing what I'm doing. I am noticing the yield curve from the 1 month to the 30-year is starting to flatten. We have the Fed coming up. They're going to probably raise rates again, which is going to make that yield curve even flatter. Once that yield curve goes flat and or inverts, then I will start looking for a pullback to turn into a real top. But for now, it's just a short-term pullback working off the overbought conditions until it isn't.